Welcome to 12-Minute Talks, where important information is shared in a short time period. Learn from other business owners, entrepreneurs, and experts about what they do to help you find solutions to everyday topics in 12 minutes or less. Hello, everyone, and welcome to another episode of the 12-Minute Talks podcast. I'm excited to have with us today Kenneth Dettman. He's a CPA helping businesses with employee retention credits. Kenneth, thank you so much for being on today.
My pleasure. Thanks for having me.
Yeah, so I think we live in a world with a lot of confusion and a lot of ads and things. And as business owners, sometimes we don't know what to do, right? So I'm glad that you're going to talk about this topic because it's something that I think we are being bombarded by business owners in general. And it's important, like I always say, to make an informed decision. So, Kenneth, before we get into who you help and how you help them, why don't you tell the audience a little bit more about how you got started in this industry?
Sure. So EZ-ERC has been around for a year and a half. Really, the employee retention credit has only been around for about two and a half years. So I began EZ-ERC having previously worked for 14 years in income tax advisory. So I was primarily helping private equity portfolio companies with all things income tax. And when the pandemic hit, my clients were looking to me to not just solve income tax problems, but all types of problems, including helping navigate the various stimulus programs that were released as part of the CARES Act. We all kind of fondly remember the PPP loans. We all remember the stimulus checks that were paid to individuals. And now we are more and more becoming familiar with this employee retention credit program. So from March of 2020 through the middle of 2021, I was trying to balance my role as an income tax advisor with the new role of general, all things, stimulus, all things CARES Act, all things Consolidated Appropriations Act with my clients. And I realized that I really couldn't holistically provide, the level of service I wanted to provide from an employee retention credit perspective because the program was so complex. So I decided to break off from my prior firm, Alvarez and Marsal, and form EZ-ERC with my wife. We have grown from just three of us back in May of 2021 to over 40 professionals that are working on this full time. We have 5 partner firms that co-brand with us, that use our intellectual property. All CPAs or accountants that are basically doing this with us and leveraging our platform. So we are going to continue doing this till the very end. The very end is April 15th, 2025, when the program technically expires. So sort of my path, my journey has been from being an income tax advisor to pivoting to a general business advisor on all things COVID related stimulus. And today you could call me a payroll tax credit advisor. But all things within the payroll, accounting, tax world.
Okay, good. So, I mean, I think I commend you for seeing the need in the community and actually saying, you know what, I can't be all things to everybody, and where are my services more needed, right?
Right.
Especially with something, whenever something is new, right, it can be confusing and it can also lead to a lot of, unfortunately, things being done incorrectly. It could be, one, people don't know what they're doing. Two, it could also be intentionally being done, right? So what are some ways that Easy ERC sets itself aside from its competition?
So we have positioned ourselves as a group of accountants and lawyers that are part of our leadership team. We are the core part of our practice that is client facing and is providing services. We are supported by a sales and marketing function. Yes, we have sales representatives. Yes, we have a robust marketing and advertising program. Um, Most of the competition that you see out there is sort of that concept flipped on its head. It's a sales and marketing focused organization that treats accounting, tax, legal as a support service. So we believe to do this right, the traditional model of an accounting or a law firm of being led by bona fide, licensed, credentialed professionals is a must. We believe that bringing in outside advisors, and in our case, almost every client that we serve, we bring an outside team of attorneys to write an external legal tax opinion behind our work to support it. So really, where we set ourselves apart is being licensed, credentialed professionals, using third parties when necessary to validate our services. And at the end of the day, if, there's a lot of firms out there doing this. If you compare our work products, which is typically a 15 to 20 page substantiation package, to some of our competitors, 1, 2, 3 pages of very, very boilerplate reports that really don't tell the story that the IRS is going to want to hear in order to substantiate eligibility. It becomes very clear that we put a lot of effort, we put a lot of time, we put a lot of technical resources behind our work product. And as you mentioned, there's a lot of opportunity for bad players to enter this space. They're already here. It's important to choose a provider that is going to be with you here, do the right thing, and is also going to be with you down the road in the event that you ever need to, work through this with the IRS.
Right. Yeah, very, very important. So in other words, this isn't a cookie cutter, one size fits all type of program, right? And so why don't we back up a little bit, because we've just been saying ERC, or employee
Of course.
retention credit, but maybe somebody listening might not know about it, or maybe they've heard about it but don't really understand how that works.
Of course. So the employee retention credit was the sister program to the Paycheck Protection Program, which I imagine most of your listeners are familiar and probably took advantage of the Paycheck Protection Program. When it was released, you had to choose one or the other: employee retention credit or paycheck or PPP. Most businesses chose the PPP. It was a higher dollar amount value at the time it was released. It was non-taxable. It was through the beloved SBA, not the IRS. So not until around December of 2020, when the Consolidated Appropriations Act was passed, did businesses really start looking at the ERC. The CAA was what retroactively changed that rule. So it was no longer PPP or ERC. You could take both. What is it? It is a payroll tax credit. It is refundable, meaning it's a cash credit. And it is available to businesses that either had a financial statement impact as a result of COVID, or had an operational impact. Businesses that were had to change or modify the way they did business as a result of all of the COVID restrictions that we remember. The easy example is, of course, the restaurant that went from dine-in to delivery and takeout only, or had capacity restrictions. If you are a business owner that had a restaurant that either suffered a decline in your gross receipts or your revenues, or alternatively were subject to different types of restrictions due to COVID executive orders, then the payroll that you paid in the periods of time that you were suffering these impacts can potentially be returned to you in the way of this payroll tax credit. So it is a 50 cents on the dollar credit in 2020, up to up to $5,000 per employee. So you can claim up to $5,000 in 2020. In 2021, it moves from a 50 cents on the dollar credit to a 70 cents on the dollar credit. And it's available on up to $30,000 of wages in 2021, which means it equates to an up to $21,000 credit. So when you see these companies that are out there saying, we'll get you $26,000 per employee, that would presume that the particular business you're looking at is eligible across the entire period of time that the credit existed, which that doesn't exist very often. And it also assumes that significant wages were paid to those employees. You have to have reasonably high earners to hit that $26,000 cap. And so This is administered through your payroll tax returns. It's done retroactively at this point. We're only looking back to say what did happen in 2020 and 2021, and it can result in, yes, an up to $26,000 cash credit to the employer, for having suffered those impacts.
Right. Okay, so that breaks it down pretty easily, right? Who could qualify, um, and not to look, not to just be enticed by, this, but this person told me twenty
Right.
six thousand. But like always, there's some fine print there that they're not telling you until months down the line, or whatever the case may be, right? I think
Right.
it's like, for people who have kids, like, oh, we can give you this much in that the child credit, right? Like,
Correct.
I don't
Right.
know, maybe, right? Yeah. So, why don't you tell us about who your target audience? Is it just restaurants or just any type of business that was impacted by COVID?
So the credit is available technically to all employers, but in a meaningful way, it's only available to employers that had under 500 full-time employees when looking at 2019 as the tested period. So sort of looking, what did the world look like for this business pre-COVID? Obviously, 500 full-time employees is a lot of employees. It can result in significant amounts of credit when you're up in that realm. But it's really available from anyone from one employee all the way up to 500 employees, that either had, like I said, a significant financial statement impact, so the revenues really were down, or the best candidates for this operational test are going to be, anything you can sort of envision in a strip mall: retail, hospitality, daycares are good candidates. Personal services like salons, spas, massage parlors are good candidates. Really, any business where people are working in close proximity to one another, whether it's employees amongst one another or employees in close contact with customers. What are not good candidates? Professional services, firms, where you could pivot to a telework platform and really kind of operate in the same way. So I came from a tax advisory firm. We had to, go work from home and make some adjustments, but by and large, we could
Yeah,
operate.
the business was still running. Yeah,
Right.
makes
So
sense.
banking's not great. Finance, insurance, professional services, tech, we can mostly do from home. It's really those brick and mortar businesses, the ones that we all remember that did suffer, that are going to be the best candidates.
Of course, great. And so, Kenneth, where can these business owners reach out to you to get more information?
So the best way to get in touch with us is on our website, www.ez-erc.com. There's a questionnaire that's available right on the face of the website. Should take most business owners 5 minutes max to fill out. It gives us a sense of what their eligibility profile might look like. Are they saying that maybe their gross receipts were down, that they had an operational impact? And then usually within an hour, somebody from our team, and oftentimes it's myself, will reach out to that candidate and walk them through, both what we can do for them and also, discuss the criteria that they would need to meet. Not everyone qualifies. There are some firms out there that look a lot like ours where I think legitimately everyone does qualify in their eyes. The key in working with, with a firm to trust and to hope that they're there with you to the end is you want to work with credentialed professionals. You want to work with professionals that had a reputation prior to the employee retention credit to protect, and will also have a reputation post employee retention credit, to continue to protect.
Yeah, very important things to look for when looking to retain these types of services. And like always, I will have all of the links down below, so anybody interested, either listening or watching the show, can click and follow to learn more about our guest today. And I just wanted to quickly introduce myself for those of you who don't know who I am. My name's Lorena Tomasini, and I'm the owner of Mom Life and Health Insurance Agency, where together with my mom, we help businesses and families with their financial protection needs. And Kenneth, I do have one last question for you. I appreciate this valuable content that you shared. You yourself have grown your own business, you said, from you and your spouse to now 40 employees, that's a big jump, right? Most people stay in the 10, 20 range for a while until they start moving up. What would you say is good advice for like somebody looking to scale their business?
I would say that the most important part of certainly my business and most businesses is human capital. So making sure that you surround yourself with people you trust. Um, Certainly delegating as much as you possibly can as a small business owner. The trap is to try to be the jack of all trades, to do everything. So surrounding yourself with people you trust allows you to better delegate tasks and responsibilities to others, which allows you as a CEO or the president or the owner of a company to be as involved as you possibly can in strategy and growth, and maintenance. So delegation is key, and human capital is key.
Awesome. Great advice, definitely. Well, Kenneth, it's been great having you today on the 12-Minute Talks podcast. Is there anything else that you would like to add?
Just I would echo my sentiments that it's very important to not just assume that as a business owner you are eligible because you saw a television ad that said that you can get $26,000 per employee. The things really to be mindful of, the schemes that are out there, involve convincing businesses that think they had a supply chain disruption. If you were a restaurant and you had trouble getting a hamburger bun, or it cost 50% more, it does not equate to eligibility. So the things to be vigilant for are companies that are trying to convince you that due to a supply chain disruption and due to the fact that CDC and OSHA apply to every business, that you are therefore eligible for the credit. That is not true. Keep your guard up. Work with professionals who you can look up and you can trust.
Yep, like we always say here, make an informed decision with those that this is what they do all day, every day, and not just like you mentioned. You were around before the pandemic, so this isn't something. It is new, but it's not new. It's obviously easier for a CPA to understand this than
90
you know.
percent plus of who's doing this right now, prior to ERC, was not working in tax, was not working in accounting. You have a whole host of very opportunistic entrepreneurs and companies out there that are doing the same thing that happened with the PPP. They're taking advantage
Right,
of the
right,
program. They are misleading customers. They're misleading businesses into thinking that they can be eligible for something they're really not. And
right.
that puts them at risk. And the problem is
Hmm.
this will go away, but the risk won't necessarily go away. But the business that advised them into that risk will probably be gone as well, leaving just the business owner to contend with with the IRS or potentially worse.
Well, yeah, very important things to look out for there. So thank you so much, Kenneth, for being on the show today.
It's been a real pleasure. I appreciate it, Lorena.
Thank you for listening to this podcast and hope you will listen to the next one. I'm Lorena Tomasini, and you can contact me via email life@malmins.com. Make it a great day.